Hey, this is your host, Andrew, and I will be taking you on the business breakdown for the week, the business blast to give you all the important information that happened. So to start off with, we have some casualties from the pandemic. Carnival Cruise Lines reported their quarter, but it was a brutal quarter. They lost another $2.86 billion. And if you compare that to a year ago, they made $1.78 billion a year ago when their cruise ships were actually operating. Now, with all of the cruise ships docked until at least the end of October, the company is still reporting losses. This time it was $2.19 a share, which is 1 cent more than the loss forecasted. Another one is Delta Airlines, which reported a loss of $5.4 billion for Q3. So you have two companies here in the travel, entertainment, leisure kind of industries where they're just getting obliterated because of this pandemic. After that, let's go into the discussions around drug maker Mallinckrodt. So this is the third drug maker that has now declared bankruptcy because of the opioid epidemic and all of the litigation that has ensued because of that. People are suing the drug manufacturers, indicating that they kind of push these drugs onto people, not knowing, or even worse, knowing that it would be terrible and they're very addictive. And now you have all these companies going bankrupt. This one is supposed to be a restructuring. It's not a liquidation. And they're going to reduce the debt load by $1.3 billion. And at the same time, they want to deal with, of course, they want to deal with all of the litigation during their bankruptcy period so that they can kind of not have to pay out as much. So that's kind of bad news for the people that were suing the companies. But this is the third one now. Purdue Pharma entered Chapter 11 protection in September of 2019. And they proposed a $10 billion settlement for all the existing claims. That's a lot of money, but it finally allows them to basically say, this is it, this is the settlement that we're arriving at. So they have a set amount for that. Insys Therapeutics also filed bankruptcy back in 2019. And Insys was the one that, in the brilliant marketing idea that they had, they decided to make a rap video that you could see online where they have like a mascot of a pill, and they're talking about their drugs and how good the company is and how they're selling this stuff that it's kind of crazy. You'd have to take a look at it. But yeah, now you have all these companies filing for bankruptcy, and you see, hopefully this is going to create some kind of awareness so that in the future something like this does not happen. We don't go through another opioid crisis. All right, so that was some bad news here, but now we have some interesting news on the innovation front. Richard Branson's company, Virgin Orbit, is actually doing a funding round for $200 million to try and basically, they're a company that they want to do payload delivery to space. And similar to SpaceX and Blue Origin, Elon Musk's SpaceX and Jeff Bezos' Blue Origin, it's basically using commercial companies to explore and expand into space. This company's doing it a little bit differently than those companies. So normally you launch a rocket, as SpaceX and Blue Origin does, from the ground, and it launches up into the air, and that's the normal proceedings with it, right? Well, this company, Virgin Orbit, wants to have a plane high up in the air going, and then it launches a rocket from the plane, and that rocket then goes into space to deliver the payload, whether that's a satellite or anything else. So I guess the problem here is that although they're trying to raise this money, they have yet to actually have a successful launch. So they've never actually done this. The idea that it's going to save money is just a theory right now. We don't know if that would actually play out. And on top of that, they're way behind their own schedule because they had said they wanted to have several launches a year already going on by 2020. So we'll have to see how that plays out. Now, this company, Virgin Orbit, is separate from Virgin Galactic, which we talked about in earlier videos. Virgin Galactic's a publicly traded space company, but that one is primarily on space tourism. So if you want to go up real high into the atmosphere and get a view of space and then come back down to Earth as a tourist, you can do that. This is more about the delivery of assets into space. And this company was actually a spin-off, broke off of Virgin Galactic, and this is the other company now, Virgin Orbit. So I thought that was some interesting news on that. Now let's jump into more of the financial markets. And we have BlackRock. BlackRock is the largest asset capital management company that there is. I mean, they have $7.4 trillion in assets under management. I mean, isn't that like the size of some countries now, I think? That's pretty crazy. They reported blowout earnings. They had $9.22 a share versus $7.80 expected. Now, the CEO, he said some interesting things here, Larry Finn. He said there is a record amount of retail investors putting money into the market. Okay, that's important. That's big. He said there's higher savings rates in North America, Europe, and Asia, all these different territories. So this is partly a reaction to the pandemic because people that are working and are still drawing in that income, a lot of the places that they went to or a lot of things they spent money on, they're no longer able to do during the pandemic lockdowns. And a lot of that money is being funneled into savings and investments. And we're seeing that here. They actually said there was a $48 billion inflow for the amount of money going into the markets now. So that's a crazy amount right there. Their revenue, I think, was $4.37 billion versus the estimate of $3.93 billion. So they just all around had a great quarter. And we're going to see this going down the list here of the different other companies that were also benefiting from this kind of investing trend that's going on. Next up, we have some companies taking a different approach, trying to make some changes to what's going on around them. Disney announced a reorganization. They're going to be spending $60 million. And what they're going to do is they're going to restructure their media and entertainment divisions. Now, the CEO, Bob Chapek, he had said that this wasn't just because of COVID, but COVID kind of accelerated the changes in consumer taste to go more into the streaming environment. And that's exactly what they're going to do now. So now there's going to be new content groups created for movies, general entertainment, and sports. And there will be a distribution arm that basically determines the best place where Disney can release the content, where it has the best potential. So that's on streaming, TV networks, movie theaters, and all that. Now remember, Mulan, which was one of the movies where Disney experimented to see if instead of launching it in movie theaters, they launch it on Disney Plus and charge people $30, even though they're already paying for the service, do people still purchase it? It seems like they had enough interest in that to drive them to experiment more with this. And once again, $30 is what they're going for, to be closer to that box office price rather than if you rent a movie for a couple bucks. It really helps the numbers for the total sales, the total revenue that can be generated by the movie. So speaking of movie theaters, last week we had Regal Cinemas coming out and closing all 500 movie theaters in the US. Now we have news from AMC Cinemas. So the CEO, Adam Aron, stated that they might be running out of money by the end of the year. And he goes, although they're not looking into bankruptcy right now, they are looking at doing some type of capital raise, probably going to be through an equity offering. They issue additional shares to gain more capital to see if they can keep things going without their movie theaters operating basically at any realistic capacity. Six Flags, this is kind of related to the Disney process a little bit. You saw Disney changing some things there, but this is with the theme parks. Disney has theme parks. Six Flags, that's all they do is theme parks. They're actually going to be cutting 10% of their workforce, which is 240 employees. But they are going to be offering severance pay and outplacement services. So at least they give them, the employees that are laid off something in return after, their years of service. So now I want to go into something. This is a little interesting. It makes you think of the old days here. They're about price fixing, and there's railroad companies and these barons that are doing price fixing and setting everything in the markets. Well, there was actually a big report a few years ago about chicken price fixing. So you go to your grocery store and you buy your chicken. Well, apparently a bunch of companies, I think, 7 of them were originally investigated for this price fixing process. Well, Pilgrim's Pride just came out and they said they're going to pay a $110.5 million fine for, and this is to the Justice Department, for producer price fixing on chicken prices. So that amount that you're paying in the grocery store is being manipulated here. Now, this is the country's second largest producer of poultry. The first one would be Tyson Foods. Then you have Pilgrim's Pride. Then you had Sanderson Farms and Purdue in fourth. So you had a bunch of these companies getting investigated, and this one's finally paying out a fee, but their stock has already been cut in half this year. So it was around $16.57 for a recent price. And just on this news that they got a settlement and that they might be able to get past the uncertainty with this for the business and pay their fine, which they would owe if they actually did this price fixing, the stock was up about 5.7% on this news. This week, we also had a big announcement from Apple. So last month, actually, in September, Apple has their big event. And there was one huge thing that was missing was the announcement of new iPhones. So they delayed that a bit, and now they've officially announced the new iPhone 12. So there's actually 4 new phones that Apple's coming out with. And it's a bit interesting the take that they're doing with this. So they have the iPhone 12 mini, and that's going to be $700. The iPhone 12 for $800. The iPhone 12 Pro for $1,100, and the iPhone 12 Pro Max for $1,100. So these amounts are kind of, people are looking at it, and these are the new 5G phones. That's the big thing here. This is the first time an Apple phone is going to have 5G. And 5G is supposed to be like instantaneous speeds almost. You have to think about the next generation of the infrastructure for cell phones and mobile equipment. So now there's a lot of emphasis on, is this going to be their next big thing? Because originally when the iPhone 6 and 6 Plus came out in 2014, that was like this huge thing. There was a larger size Apple phone, and it made such a big deal. And they actually sold a record 232 million phones in 2014 at that time. And that was just from switching the screen size. Now we're jumping to a new industry standard for this 5G as the networks are developed. And a lot of people are looking at this and wondering if this is going to be another big jump for the company here. The stock was down a few bucks on the announcement, but the stock has doubled since the beginning of the year. And people really want to see, is this going to be changing the trend for iPhone sales? Or is it going to be still kind of leveling off? If you look at actually Google search trends for iPhones, you can see that in the past, when there was a new iPhone announcement, the Google search trends would go way up. Now, when there's a big announcement like this one, it's kind of tapered off, and it's the same amount for the past few years when there is a big announcement. The 5G phones, although this is big news, we haven't really seen the impact yet, and it's not really trending as much on Google. But enough with that one. Let's move on to the next one. We have tariffs. So tariffs come in play here. Last year, the World Trade Organization allowed the United States to impose $7.5 billion in tariffs on the European Union's Airbus company. So that company makes different kinds of aircraft, passenger aircraft. Now, the World Trade Organization just came out and said that the European Union may impose tariffs on the United States Boeing company, which makes aircraft. And it's basically a retaliatory kind of situation here. But these are $3.99 billion from the European Union potentially on Boeing's jets. So once again, it was $7.5 billion for the US on Airbus, $3.9 billion on Boeing's jets. So Boeing stock they've had a lot of bad news with their software and kind of covering up things, and there was crashes with their planes and all. The stock was actually recently around 167.35. But it's way down from around 325.76 in the beginning of the year. So it's already been cut in half. Now you're getting tariffs on their goods, so they're not going to sell as much overseas. So not very good news for the company there. Next up, we have another investment bank that we talked about, Blackstone, earlier. Now we're seeing the same trends with Goldman Sachs. Goldman Sachs earned a blowout $9.68 per share in the third quarter, when the estimates were only for $5.57. Their revenue also beat. Profits were up 93% from last year. That's insane. We spoke about how this is a record year for corporate bonds in the other videos. Goldman Sachs, they did a lot of emergency loans right in the middle, right at the start of the pandemic and the lockdowns back in the March, April time period. A lot of those have already been paid back. And it's interesting to see now that this is when the Federal Reserve is buying corporate bonds, and companies have a lot more liquidity. They're able to raise capital through bond sales, and they're paying back Goldman Sachs here. And it's kind of a backdrop for a company like this gives emergency loans, and then they're able to pay it back because they're able to do additional corporate bond offerings where the Federal Reserve, the endless pit of money, backs them up. So I thought that was interesting right there. So if you look at the return on equity for Goldman stock, it's the highest since 2010. And we talked about Apple's announcement. A couple of years ago, Apple announced the Apple Card, which was backed by Goldman Sachs. That was the bank that was basically issuing the card because Apple can't do that themselves. They needed the financial company to do that. Well, revenue is up 50% in the unsecured loan business. So that new business that they're going into to be more kind of mainstream and going with regular individuals, it seems to be making them a lot of money. The company had higher net revenues in older business segments, with the best being asset management and global markets. So once again, just like with Blackstone, you're seeing those same things. Trading. The trading department had a 29% increase in revenue from a year earlier. So asset management, trading, the markets, it's all the same here as it was with Blackstone. So going into that, I wonder what the top performing companies in the S&P 500 are, right? So if you look right now, you have Etsy up 243%, Nvidia up 141%, West Pharmaceutical Services up 96%, PayPal up 90%, and Amazon up 85%. So that's great for the top performers. What were the worst performers in this market? You have Occidental Petroleum down 74%, Carnival down 72%, Norwegian Cruise Lines and other cruise lines down 72%, Marathon Oil down 68%, and Technip FMC, not sure about that one, but they're down 67%. So if you're looking there, you're looking at two companies that are in the oil industry, which, if you look back 10, 15 years ago, the all-time high, I think, for oil was about 15 years ago at this point, when it was at around 147 a barrel. That was the sector everybody wanted to be in. The oil industry was booming. And you look at it now, and two of the worst performers in the S&P 500 are in that sector. Then you have two, both in the cruise line industry. What's the one that's not on here? See if I can remember that. Carnival, Norwegian Cruise Lines. Was it Royal Caribbean Cruise Lines was the other one that's not on this list for the worst ones. But I thought that was just interesting to see the different areas that are doing really well and really poorly in this environment. Next up, we have a company called Activision Blizzard, which is a video game company. And they announced they're closing their office in Versailles and also laying off the workers there. There's about 285 employees that they will be laying off in France. And so a bunch of people within the company wanted to kind of, they didn't like that Blizzard was laying off these people, so they wanted to do a protest and do a strike, and they were trying to mount that. And it was basically, Activision has their video games are doing really well in this environment. People are stuck at home and they're spending money on video games, and yet they're laying off people. A lot of the people at the company said this was just for, tax purposes. They're moving the offices to England where it's a better tax system. It's going to be outside of the European Union. And then on top of that, management repeatedly apparently told people in the French office, no, there's no ideas, no thoughts about closing that workplace. And yet they have done that. So it's laying people off amidst a pandemic when the company itself is doing great and actually reporting pretty good earnings. So we're going to have to see how that plays out. I mean, this is also, you're seeing this company Activision, which Blizzard merged with Activision a number of years ago. And we've continually seen Activision, the more corporate side, the publisher, getting more involvement in Blizzard, which is it used to be just about creating great games. So they have games like Warcraft and Starcraft and Diablo. I mean, do you remember? Don't you guys have phones? I mean, do you remember that? They originally were all about just creating great games, and then now the corporate overlords are coming in and kind of changing up the scene here a little bit, and people are saying that that's what's going on with these layoffs. On top of that, Activision has also announced that they're delaying a World of Warcraft update. That's their MMO game that is really big, and they have a lot of subscribers, and it would be postponed to release later this year, so there's more time for testing. More video game news here. We have Tencent, which is a Chinese powerhouse company that owns a large stake in what is equivalent in China to the American version of Twitch, which is owned by Amazon. It's a video game streaming platform where people watch and they can see other people playing the games. Well, the ones in China are called Huya and Douyu, although I'm not sure if I'm pronouncing those correctly. But this is, once again, you see what China does is they copy a American-style company and have their own version of it, because a lot of times the American company can't operate there on the same page. You see that with their version of Google is Baidu. Now you see this with the company where it's like Twitch, right? So this is along the lines of, every company does this over there, but these are big because those two companies merged together, and now Tencent owns 67.5% of the new company. And that's a $10 billion merger. So this is like a huge platform. It's 330 million active users and 80% of the video game streaming market there. So we're just seeing Tencent continue to gain more and more influence in the Chinese market. So now let's go through a number. There was a ton of bank earnings that just came out. We had PNC Financial earned $3.39 a share for Q3. That was above estimates of $2.12. They set aside $52 million to cover possible bad loans. Now here's the important thing. In Q2, they set aside $2.46 billion for bad loans. So you can see there's a huge difference. Companies are not setting aside as much now for bad loans as they were in the last quarter, Q2, when the pandemic started. US Bancorp beat estimates. They earned 99 cents a share when the estimates were for 91 cents a share. JP Morgan earned $2.92 a share versus estimates of $2.23. So a lot of these banks are making a lot of money. JP Morgan actually beat their revenue side by $1.5 billion more than the analysts expected. So that's a nice bump there, just an extra $1 billion thrown in. And JP Morgan actually reduced their reserves for bad loans by $569 million. And once again, like the other investment banks, they were also helped by trading revenues. Continuing trend here. Bank of America earned 51 cents a share, beating estimates by 2 cents. Profit fell 16% in the third quarter, though. They set aside $1.4 billion for loans for the third quarter, which again is smaller than the first and second quarter numbers. Morgan Stanley, revenue from the trading desk, led to a 22% increase in revenue, 25% increase in profits. That is the highest profit the company's had thanks to this third quarter 2020. I mean, that's pretty incredible right there. So then we do have a couple of banks that didn't fare so well here. We had Wells Fargo, made $2.4 billion in profit from the quarter, but that was down from $4.61 billion a year ago. Earnings per share of 42 versus expectations of 44 cents. Now, the better than the second quarter where they lost $2.38 billion, but still, they're losing a lot of money. And Wells Fargo has all those other problems where they were making fake accounts and they had all these CEOs coming and going. They set aside $751 million for bad loans for the third quarter. Now, my big question with all of this, are these bad loans going to be, they're setting aside less money. What happens when people go off of their unemployment benefits and a lot of the loans that were on the pandemic where they were able to postpone payment on, when they'll start coming due, aren't those bad loans going to come back and hit these companies? So it's going to be interesting to see if that actually affects it like this. Citigroup also had kind of a bad quarter like that. All right, so that was all the bank stocks information right there. Now let's take a look at the economy and how it affects us, right? So when we had the pandemic, we had everybody going to the stores and clearing off the shelves, buying all the canned goods and everything else. Well, it turns out canned corn sales were actually up 50% since the start of the pandemic. So that's a huge number for something that traditionally doesn't see a lot of growth, right? Now, there's a problem with this because canned corn is not something that can easily be recreated if there's a drought of it, if there's not enough of it. And what happened was the whole corn crop, this is in particular the sweet corn that's used for canning, they planted that crop before the pandemic. And the pandemic happened, all of the stuff that was in the store shelves and in the reserve got cleaned out. Now companies like, it was Del Monte and Green Giant, they're asking for a 25% increase this year in canned corn production and canning. And now they don't know if they're going to have enough corn because the corn crop is actually smaller than what's going to be needed to fill this new kind of goal that they have. So it's still going to be in kind of short supply. It's kind of crazy to think about that, how it's affecting the overall economy and the whole agricultural sector with this. Now, another sector of the economy rather, that's making a lot of money now is the one that makes PCs. PC sales have jumped during the pandemic because people are stuck at home. You have Apple sales up 38.9%, Acer up 29.3%, Lenovo up 11.3%, and HP up 11.2%. So a lot of people are buying personal computers. Next up, we have Starbucks taking a different approach with diversity training and tying it to executive compensation. Basically, they want to see if they can get a certain percentage, I think they had actually, yes, 30% of US corporate employees and 40% of retail employees to be, as they say, people of color by 2025. So executive compensation is actually going to be tied to that. The company has 200,000 employees, so that's around 60,000 minority jobs potentially. So we'll have to see what ends up happening with that and how the marketplace reacts. Going into the unemployment numbers this week, we had some rough data this week. The unemployment numbers jumped to 898,000 people last week. So this is the highest since August, and this is people filing for claims. But more importantly than that, I mean, we were at 840,000 for the past few weeks, and now it jumped again. More importantly, though, I want to highlight this. About 2.8 million workers filed for extended unemployment benefits in the week ending September 26, up 818,054 from the prior week. So that was the largest weekly gain since the program's launch last spring. So you're seeing people on these unemployment for longer and longer periods. And now the official unemployment rate is 7.9%, right? But what happens when people are unemployment for a number of weeks, they fall off unemployment, then it hits a different number, it hits the labor participation rate, and they're no longer counted as being unemployed. They're counted as something else. So it kind of distorts the numbers. And since we've had these kind of legislation that allowed an additional 13 weeks of benefits during the pandemic, now this continuing claims is a number to watch because there are a lot of people that are falling off these programs. And if there's no new stimulus bill that's passed and there's an extension of these credits, what's going to happen when all those people are going off of the unemployment and they're not getting any income at all? That's going to be pretty crazy. And that's another thing with the loan losses, right? If you're paying your loan and you deferred payments on that and you're getting unemployment, what happens when you can't defer the loan anymore? And on top of that, you're not getting unemployment money. So that could be kind of crazy. So after that news, the stocks fell for like 3 consecutive days on the week on that. And then, they were up a little bit on Friday. But if you're looking overall at the market, you can see right now, the S&P 500, if you look at the multiple that it's trading at, the price to earnings of the overall S&P 500 index, it's trading at about 22% right now. Now that's about like 50% from the increase from the historical norm. That's pretty high, it's pretty significant. And if you're looking at like a 10-year average of the valuations, it's a 50% increase, right? But the long-term average would be around 15.85. So if it's trading at 22 times forward earnings now, and the historical average was 15.85, you can see that there's this kind of a lot of money has been flowing into the markets and it's starting to get pretty pricey in some areas. Speaking of stocks that are going way up here, we have the Korean pop group BTS had their management company Big Hit Entertainment start trading on October 15th. We talked about that some more in the other video, but I wanted to highlight here, the initial public offering was priced at $117, and the stock closed the first day at $224. So it almost doubled, it almost doubled on the first day. I wonder if the fans of the group, the army, if they were the ones purchasing the shares. So they raised $840 million in this IPO. Last week we talked about Robinhood. There's a lot of follow-up news this time. So Robinhood had accounts that were hacked and people were complaining about it, and there wasn't a lot of resources for them to get their money back. Funds were drained out of their accounts. Turns out it wasn't just a handful of people. It was actually 2,000 accounts. They just came out and said this. 2,000 accounts. And then on top of that, some of the people were saying that it had nothing to do with breaching their emails or something like that it was about Robinhood and the app specifically. So we'll have to see over time how this kind of plays out as more investigations are done. Another thing is a company called Peloton, which makes those bikes where you can watch a video while you're working out. Well, that has been a big company, big in the news a lot because of everybody using something to work out at home. Now they're using it so much, they're breaking off the pedals on the devices. But it turns out it's not their fault, it's the company's fault. They just announced a recall on 27,000 of the bikes that they had issued to the marketplace. Most of these are the earlier bikes when they first went to market, but the pedals were breaking off of the items and people can injure themselves. So now they have to do this recall on all these units. If you're looking at college enrollment, would you think the amount of people going to college during the pandemic would go up or down? Well, Undergraduates at U.S. universities fell by 4%. First-year students at universities fell at 16.1%. So 16.1% is a huge drop for people just entering into that kind of college market. And the thing is that, I guess if you can do everything at home, why do you need to go to a big 4-year school, go on campus, party it up, have courses in, the courses are online now. They can't even go and meet in person anymore. So that's pretty crazy. Graduate enrollment actually increased 2.7%. So there was one thing that was up here, but everything else was down for enrollment. Retail sales numbers. So they were up in September from August, and it was about an increase of 1.9%. So we've had 5 straight months of retail sales growth. So that's some good news right there. Clothing in particular was up 11% for the month. That's less than last year, but that was when people could actually go outside and not like this year when you can't. Separately from this, we had Amazon Prime Day, which, it has to do with retail, right? They had their Prime Day on October 13th, and we noticed that there's a lot of other companies that are kind of copying Amazon and trying to do some type of sale on this date. You had both Best Buy and Target create their own deals to coincide with Amazon Prime Day. So it's interesting how the marketplace is, how these companies are trying to compete on that level, and the beneficiaries are the consumers, right? So the consumers are getting lower costs. They're getting 3 sales instead of potentially just 1. So that was good news to hear as well. Now let's go into kind of the spending and what is going on with the budget gap for the fiscal year. It just ended in September for the United States fiscal year end at $3.1 trillion fiscal budget gap. That's huge. So that tripled from the other year, from last year, which was around $1 trillion. And the problem here is that it's not just the United States. It's actually countries all around the world that are experiencing these huge budget gaps in their fiscal budget. They have the tax revenues going down right now with the lockdowns, with the pandemic, with recessions. And then on top of that, you have people not spending as much, not earning as much, people getting laid off, going on unemployment. So they're just getting hit from multiple sides here. And when you look at it as a share of the world economy, deficits as a share of the world economy are now at 16% on a global scale. So that's the highest level since World War II, since 1945. You have to go back to find a level where the deficit would be that high. After the 2008 financial crisis, this was a concern too, right? The deficits started getting really crazy, but they topped out at 10% in 2009, and we're at 16% on a global scale right now. So we're gonna have to see where this goes, right? But I mean, it's basically like you can just spend money like crazy and it doesn't matter. I guess it doesn't matter. The Congressional Budget Office now says that deficits will be running over $1 trillion a year through 2027. So you can go out there, you can spend all your cash, power up your credit card, spend everything you got, and it doesn't matter. You don't need it. You don't need to care about the bills. You don't need to care about oxygen even, It's kind of like, what was the thing? He goes, do you think that's air that you're breathing? I guess things will play out as they will. Johnson & Johnson, they halted their vaccine because there was a health condition that came up, and they kind of had to pause their trials. And at the same time, Lilly also announced that they had to pause their trials. So that was not good news, right? But then you had Pfizer, which came out and said they're on track to reach a milestone in the COVID-19 vaccine candidate in the 3rd week of November. And once that happens, they can go to the FDA and get special approval now for this emergency authorization and potentially release a vaccine a lot earlier. So you had 2 companies have some problems and have health concerns that arose once they were doing the trials. And then you have Pfizer that has one potentially that might get through. So we'll have to see what the next steps will be for that. But that does it for today's business news. Thank you for watching. I hope you enjoyed the show. Tune in next time and I'll fill you in on the business breakdown for the week. Thank you.